Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, it's John Howell here, and I want to share something with you that I found very, very helpful, and hopefully you find it very helpful as well too. So in the midst of what we're seeing right now, inflation has been a very big thing across the markets, right? Obviously, there's been this big thing about inflation, and we all feel it. Okay, I go to the shopping centers, I fill up my car. Things do seem to be getting a lot more expensive when it comes to inflation, and actually, they're not seeming; they are. Okay, so the thing is that what you're looking at right now is an inflation cycle. It says forecast, but it's an inflation cycle indicator. Now, obviously, nothing is 100%, but if we can get some gauges of what's coming, then we can sort of get an idea of what's likely to happen. The cause and effect relationships, right? Because if we can see what's likely to happen coming soon over the next couple of months, that's the cause. What is that effect likely to be? And therefore, how can we position ourselves to benefit financially, okay, and do really well? And that's what I'm always. It's one thing I really have learned from Ray Dalio, right? The cause-effect relationship. So what you're looking at right now is inflation for cycle forecast, and it's more like it's just a cycle indicator. And again, it's not mine. I recently watched a video from Larry Williams, and I saw this, and I wanted to take a screenshot to share it with you because I think it's really, really, really important to see what's really going on with that and what can we expect moving forward. Now, I want to remove the word fear from our vocabulary right now, okay? Because a lot of the times we can look at the markets from a fear perspective, and it's going to bog us down from looking at things from a really good opportunity perspective. So the first thing I want to say before I start looking at this, what the sort of the cycle forecast is telling us, I want to really remind you that through history, when something goes vertical on either direction, up or down, that's a very big price move, right? We have a very big price move down or price move up. But there's a thing called price and time in the markets, right? And so if I just draw, I'm going to draw on the screen right now. But if I draw, if we have a very big price move, we have a very big price move up, what tends to happen? And this is what actually happened a lot with last year, right? That's the reason why Bitcoin actually had a very big pullback. Why? Because it went from like 10,000 to like 70,000 in 1 year. That's an enormous move up, or 10,000 to 60,000. Or that's the reason why it went from where it was initially in 2017 and went to 20,000, went straight up. Everyone was talking about it, and then it came straight back down. So I'm not saying it's going to reverse 100%, but what you see through history is that whenever we get these really vertical moves up, that's a very big price move up or very big price move down. Just like with oil, right? We had a very big price move down and went negative. But what tends to happen is that when we get that, we generally get this very nice snapback of what that market is, right? We saw that with GameStop. We saw that with a lot of stocks that actually went crazy last year, right? So I really want to preface that with that through history. If we can just remove our word fear and just look at when things make a big move, like this here is like what we call a price move. Is when things make a big move, there's going to come a point in time where there's a thing called time, right? There's a price move, there's very big price moves, and when we have a very big price move, what tends to happen is we generally go through a bit of a pullback or a sideways consolidation, or sometimes a very sharp pullback, especially if we're way overextended, to neutralize or balance out time, right? There's a price and time in the market. If we've done a lot of price, like we see through here with the inflation, we did a lot of price. So a lot of price, we had a very big move down. Then when we did that, because we're so overextended, it's like an elastic band, we tend to snap back. Now, what can happen in a lot of times in bubbles, again, we saw this with GameStop, is that you get a very big move up, and then you got a very big move up, and what can happen is that if it's a bubble, a lot of the times it can come down and retrace almost 100% of that. Actually, what's happened with Bitcoin when it initially went to 18,000, I think back in 2017, right? Because we had a very big move up and a very big pullback. It's a price and time balance. So whenever we get these spikes in markets, firstly, be alert that you are probably entering towards the end of that move, right? Because that's how markets work. It's a price, it's a cycle perspective, price and time, but also the rubber band effect. If we get too over extreme too fast, vertical move down, then guess what? We tend to get the hard and fast snapbacks, right? That's why if you go look at what happened in 1987, right? 1987, we had a very big move down very quickly, and then we end up getting a snapback. Now, it doesn't always come back to the highs of where it started, but a lot of times we can come back to at least 50%. And as you can see, that's exactly where it came back to, even through 2010, right? 2008, 2010, when the inflation dropped through there. But the same works for the other side as well too, right? We can see here that I'm going to preface this, and then I'm going to get to this blue line in a minute, where it's going to share with us the cycles of what's going on in the markets, okay, of this inflation. Because if we can understand this and the likelihood of what's likely to happen, the cause, we can then go to the effect, and we can go from there. So again, the first thing is that price and time, right? The price move. Look at this here. We've had a very, 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 very big move up. Is that going to sustain? No, right? It's not. It's not going to keep going up. It's not going to keep just doing this and this and this and this. It's just not going to. Okay. Yes, we've got the biggest spike in the last since 1990. Okay. Yes, it's done that. The biggest move in history, but you know, it's like you hear these articles, right? The worst month in history for the stock market. What tends to happen the next month? We tend to get the best month, right? The yin and the yang, the price and the time. The price is, okay, it's made a very big price move. Now we just need some time for it to pull back, to catch up, for it to just stabilize a bit, right? It's just to calm down a little bit. It's like when you take a pre-workout, right? You take a pre-workout, you're ready to go, you go to the gym, you've done a really big workout, guess what? Then you start to calm down. You go home, you start to relax, you get some food in you might even take a nap, right? You've gone from, oh my goodness, here, I'm you've taken your pre-workout or your coffee, right? You're ready to go, oh my goodness. And then like a few hours later, guess what's happening, right? You're down here and you're in bed, right? Having a sleep. It's just the yin and the yang of how life works, how our life works. And when we can start to look at this from, again, non-emotional perspective, we can really start to see, okay, this makes sense now. Okay, because the thing is, if we just go on what the articles are telling us, remember the articles are telling us what's happening right now, right? The news headlines is reporting what's happening right now. It's not telling us, it's not giving us any clue of what's coming down the road. Now, the headlines, and because a lot of us, when we're reading inflation's bad, we'd read that for 2 or 3 or 4 weeks or a couple of months. Guess what? Now we automatically think, it's always going to be bad. And this is where the media is not a good place to get your advice. In fact, the opposite, right? If you hear something doing really, really, really well, run. If you hear something doing really, 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 really bad, like oil going negative, you might want to start to look at that market like, something just crashed. Oh, what was that? Let me have a look at that because it might be a good buying opportunity, right? Even from the snapback and so on and so forth. Because we actually had, and this is the same thing that actually happened with the COVID situation, right? When we actually had the COVID crash, the market just in 1 month straight down. But I knew we were going to at least get a 50% snapback in the stock market. So what was I doing? I was buying call options towards the bottom quarter. I didn't get exactly the bottom, but within a few weeks of when I started buying call options, and I had bought a lot of time with that, I bought well over 12 months. Guess what happened? Within 6 months of that happening, the thing retraced almost 100%, and I made, in some of my options, I made almost 200-300% return just by understanding the situation, right? Taking advantage of it. So where we are right now, we can see what? We can see we've had a big move. So it's not going to continue up. We're likely to get what? Just through nature and how things work, we're likely to get at least a bit of a calm down a little bit, right? A bit of a pullback, or at least a bit of a stabilization. Please don't say that can't happen, John, because anything can happen, right? Just look, again, it's just how nature works. It's how our life works. When things go vertical, they have big pullbacks. I think I've beat that, that horse, okay? So that's the first thing, is so we can see that. The second thing is looking at this indicator. Again, this is the Larry Williams indicator here, but you can see here that through history, since the 1990s, right? The 1990s. And then the 2000s and 2010 and 2020, and here we are right now in and this is the 2026, right? But we can see here that we have these major low points. This is what cycles tell us in markets, right? And then we have these major high points. And generally what happens is we tend to get very significant low points in the market and very significant high points around these cycles, right? Like look at this back here, before 1990, that was the low point. That was the low point right there, inflation, and then the market rose up. We didn't exactly get it 100%, but guess what? We're getting very close to what? Around that point there, we're getting very close to a turning point. The market came down, nothing happened there, and we started to come back down, but guess what here? A major what? Low in the markets. Then it came back up, made a major high in the markets, came back down. We had a low. So we actually made a significant low point. Now this is looking through decades and decades and decades, right, guys? So of markets, but you can see here. Look at this high. That was this is just the cycle high, and this is the cycle high here as well too. Look at this here, 2010, absolutely spot on from the low point, and then we rallied up. We started to make this high. We made this high point, this cycle high here, which is just the indicator telling us the cycles. And then we made it here. Look at this here. We come back down probably towards 2015. That was the cycle. The cycle indicator was telling us that was the major low point, and we're going to get a turning point in the markets. Guess what? We got that through there. Then the market ran up. We had this major high point. Again, it's not 100%, but I say probably 80% of the time, maybe even 75% of the time, we're getting a very good clue, right? That was the high point, but it just went sideways, and then we come back down, and then the cycle said, okay, this is the next turning point. So, and then that was actually spot on. But look where we are right now. We're getting what? We're getting very close to what? The next turning point in the markets. And when we start to see that, probably, and this is, I'm not exactly sure what month this is, but I would say maybe a couple of months from now, maybe this month and next month, we're going to start to see maybe this happening, right? And the inflation start to turn around and start to come back down again. Firstly, how just life works, we're likely to get a pullback because nothing goes vertical all the time. The rubber band effect. But then the second thing, right? The second thing is the cycle's telling us we're getting very close to a turning point for things to start to cool. And then when that happens, guess what? It's not until 2026 that we get another major low point like here. Right? We start to get another major low point here, and a major low point, major low point, major low point. We'll see these major low points, and guess what? Are all in line with these massive cycles. So it doesn't mean we can't get something like this, right? Because every now and then we get another bit of a spike through here and so on and so forth. Okay, but due to the fact, the first thing I said is that the markets that we've just gone too fast, too high, and the rubber band effect is we're going to start to at least have a bit of a cool down through here. This is the line is from the black line is the inflation, the blue line is just the cycle forecast indicator that I got from Larry Williams' video. So then we see the pullback through here, and then that happened. So why am I saying this? So this is the two things telling us inflation is likely to pull back. That's the cause, right? Or this is what's likely to happen due to way life works and also potentially cycles. So what if all this stuff does start to happen, which is likely to happen? If you were going to the casino, if you're a betting man, and you said, okay, inflation is going to continue going through the roof for the next 12 months and it's going to never stop. Or just looking at graphs, we can say, okay, the likelihood is we're likely to start at least slowing down a bit. So the likelihood is it's going to start to slow down from what I just said there. So that's the cause, right? This is what's likely to happen. So that's the cause, but what is the effect going to be? The effect is what going to be? The effect is going to be once we start to get this cooling down period and inflation is no longer an issue in the markets, guess what? Oh my goodness. we are going to start to see some really significant buying coming back into the markets, because that's where a lot of fear has been, the inflation data, right? Inflation. Now, maybe, just maybe, because a lot of these times, these major low points through here, that one didn't happen there, but this low point through here, maybe, just maybe, this is telling us the 2026, that 2025 to 26 period, maybe, just maybe, because now we're getting into potentially deflation through here, maybe, just maybe, the indicator is telling us roughly around the 2024 to 2026 period, roughly around there, that's when we can start to be very nervous about a recession coming into markets. Why? Because if we start to get the indicator pulling back too fast, too hard, then guess what? Now we're talking about deflation in the markets, which is what? Recessionary. So maybe this is telling us, but that's, you can see that's 2024 to 2026, maybe that area through there. But once this starts to cool down over the next couple of months, and the data starts to show us that we're slowing down, and we're starting to get a pullback effect in the inflation cycle, then we're going to start to see a really significant turning point in the stock market, and we're going to see an incredible move. So this is one of the reasons, I've got many reasons why, but this is one of the reasons why I see in the second half of this year that we're going to see an incredible moves to the upside, because we've had so much fear and so much negativity and a real big pullback in the stock market for the first half of this year, that the second half of this year is likely to be really crazy bullish in the markets. So that's what I'm seeing through there, traders. I hope this helps you out. Remember, at the end of the day, we're just using tools to give us some probability of what's coming, not what is, but what's likely to come. And then we can start to keep an eye out for this sort of stuff, because once it actually starts to happen, we know the cause. The cause is obviously this is the thing that's happening, and then the effect is likely to be X, and therefore we can position ourselves in the market through there. So I hope this helps you out today, traders. If you do need some help with your trading, then make sure you join my free trading course with a link in the description. Grab on that, get on that, guys. Go get access to the free trading course, and I'll see you very soon.